So I think over the next couple of years, the EV winners and losers may be determined on who's closest to the battery bread truck. Elon Musk owns the bakery, but we still think it's something you kind of need to own, because many of my clients that say, I want EVs, but I don't want Tesla. Our message to them is, you run the risk of not owning the company that could make all the other stuff you own obsolete. And you need to kind of cover that risk.
Who is going to be leading the charge? We still think it is Tesla.
From the very beginning, Tesla's mission has been to accelerate the world's transition to sustainable energy. And to achieve this, Tesla has developed more than just sexy and efficient electric cars, but it has also been advancing the entire industry with its ability to pursue the technological breakthroughs for our future needs. In this video, I'm going to be breaking down an article from Barron's that just came out today on March 1st, talking about Morgan Stanley's outlook for Tesla and how it will disrupt the auto business. I will also be providing information on some key points regarding Tesla's multiple businesses, such as the Tesla's insurance, software, battery supply, and more. If this sounds like something you're interested on, consider subscribing to Electric Invest and hit the notification bell so you don't miss the next video. And without further ado, let's begin. Now, Morgan Stanley still has a buy rating on Tesla at $880 a share. Currently, Tesla has 950 million shares outstanding, with more than 1.2 billion on a fully diluted basis, which includes things such as management stock options. But the Morgan Stanley analyst, Adam Jonas, gave his estimation based on 1 billion shares outstanding for easier math. Adam Jonas breaks down his estimates on multiple parts of Tesla's business, which is comprised of 6 components. They go on saying $345 a share for the core of Tesla auto business, and they have a very conservative number of 5.4 million units by 2030. You guys already know that Tesla is aiming for 20 million, so only time will tell. Obviously, Elon did say back in 2014 that Tesla could hit 500,000 vehicles by 2020, and that was 7 years ago in 2014. The second one is that Tesla Mobility at $77. The third one is Tesla third-party powertrain supplier at $100 a share that they're giving it. The fourth one is the energy at $75 a share. 5, the insurance at $36 a share, with the sixth one being network services at $245 a share, and that is based on 16.5 million connected fleet by 2030. Now, we're all familiar with the car and software services of Tesla, as they are the most developed to date. I have already covered Tesla software and ride-hailing services on my previous video, which you can click on the card on the top right corner to view it. But just as a quick recap, as many of you guys already know, ARK Invest's estimation projects this side of Tesla's business to be the single most important catalyst for Tesla's future.
I think the operating earnings to the platform providers like Tesla could be worth over $1 trillion globally by 2030. So this is a massive opportunity.
But let's not forget that Tesla is also making huge progress on the battery supply and stationary power. And with advancements on the full self-driving beta testing, paired up with billions of miles collected, putting Tesla ahead of the competition, the robotaxi or ride-hailing services of Tesla is something that Tesla can realistically achieve. Although not a lot of news have been reported on Tesla's insurance, it is already a powerful side of Tesla's business that should not be ignored. The global auto insurance market size was valued at $739.3 billion in 2019. And is projected to reach 1.06 trillion by 2027. And with an amount of about 300 billion in the United States alone, it surely is a huge potential for both Tesla and its customers. Car insurance is a huge chunk of customers' cost of ownership, and especially even larger for electrical vehicles, as traditional car insurance companies tend to charge even more higher premiums as they don't have the proper data as well as the maintenance cost of an EV. It's no wonder why Tesla wants to make insurance a significant portion of its business to ensure all Tesla owners with the best rates. Here's what Tesla's CFO, Zach Kirkhorn, had to say about Tesla's insurance business.
And so really ultimately where we want to get to with Tesla Insurance is to be able to use the data that's captured in the car, in the driving profile of the person in the car, to be able to assess correlations and probabilities of crash, and be able then to assess a premium on a monthly basis for that customer. And what makes this very exciting for us is the amount of data that is available with the customer's permission to use is not available in any other product or any other vehicle in the world. So this gives us a unique advantage in terms of information.
So rather than merging you with a potential pool of other drivers by age, region, and driving history, Tesla's insurance gets to be more by collecting data from the specific driver on an everyday basis to have a unique price specific to you, and Tesla is able to do this by utilizing the help of the driver assist features that already come standard, such as autopilot, and those who have it, the full self-driving software, which although will be more expensive, people can still access it at a much cheaper price with the subscription service that is going to be coming later on this year. Thanks to this ability, this will mean that Tesla drivers can pay 20 to even 30% less compared to traditional insurance providers. It is also stated in their website that they will develop a fully commercial insurance for the future robotaxi ride-hailing service that will definitely help Tesla owners have the best coverage for this brand new industry. In order for an autonomous vehicle to have the best insurance, you will have to have control over the mechanisms of the car itself. And Tesla is already well positioned to be able to do this, and thus will have a tremendously huge advantage, not just on Tesla's insurance as a whole for regular drivers, but also insurance for the autonomous vehicles on the ride-hailing side. As of right now, Tesla insurance is only available in California, but Tesla has plans on expanding to other states in the United States and potentially all around the world in the future. I personally think Adam Jonas from Morgan Stanley is being a little bit too conservative on this, given Tesla's amazing potential on this side of its business, considering how large the autonomous ride-hailing service is actually going to be. But now I want to discuss a little bit more about an interview that Adam had on CNBC, where he spoke a little bit more about Tesla and his opinions on the battery supply.
Adam, in aggregate, I mean, everybody's talking about supply chains and input cost. Musk himself tweeted about nickel, I think, last night. What do you tell investors who are looking at the industry as a whole and ask where, for example, where are all of these batteries going to come from?
That's our number one question right now. We're asking our management teams about it. There's still a lot of work to do. Our chemists in Asia and our battery folks say it's kind of hold your breath territory now, not an issue yet. But we think there's going to be a supply-demand imbalance for batteries, not just batteries categorically, but particularly renewable batteries. If you think about where is Apple going to get their battery from 5, 6, 7 years from now, and you imagine the level of transparency around that supply chain, people might ask, is it a blood battery, right? I mean, a dirty little secret, folks, is batteries is a really dirty business in the traditional form in terms of water, CO2, mining, labor practices. And that all has to be redone. And so we can imagine quite acute battery cell supply shortages for the type of battery that's going to be in a renewably sourced ESG tick the box type of battery.
Now here's where I'm going to go a little bit deeper regarding the battery supply shortage. I want to point out that from the very beginning, Tesla knew that the demand for the batteries was going to be sharply increasing, and unless there was a way to produce more batteries, Tesla knew that electric vehicles were not going to succeed. The great thing is that Tesla was already ahead of the competition before the competition even existed. As a matter of fact, since 2014, since Tesla announced the Gigafactory in California, they were projecting that Tesla was going to be outputting more than the total world's output of lithium batteries at that time, just from that factory alone. Now, Tesla knew it couldn't start producing vehicles fast enough, even at that time, and it is no wonder why Tesla started outsourcing batteries from suppliers like Panasonic, LG Chem, and CATL to meet their ambitious production demands. And not only that, Tesla has been securing 5 to 10 years of material supplies ahead of the competition for quite some time. One of the most recent ones is with the works of Indonesia's nickel mines, a country that is one of the largest outports of nickel on the planet. For many years, Tesla has already been anticipating it needed to secure not just the battery side, but also the materials for the batteries. And this was at a time when almost every automaker was still betting that Tesla was just going to die out. But this is one of the major reasons why Tesla is well positioned to have the least issues of any EV company on the planet regarding battery supply shortage. Not only that, aside from ramping up the 4680 batteries, earlier last year, Elon Musk said that in the Q4 earnings call that they will be buying as many batteries as they need from many suppliers, and Tesla will even allow the 4680 battery form to be made by other suppliers as well to help Tesla meet the demand. And we already have proof of this because earlier in February, we learned that Panasonic plans to deploy 4680 battery cells production later this year to help Tesla meet the demand, and we already know that the estimates for Tesla in 2021 are expected to be at least 50% or more, which would put Tesla's production capacity anywhere from 750 to over 100,000 vehicles in 2021. It wouldn't surprise me if Tesla achieves a little bit more than that, but we still have to wait and see. And Tesla's ability to stay ahead of the curve is just completely underappreciated in my opinion.
The two big, I got a prop for you here. Sorry, I put some food, there might be some food on it. I don't know if you can see this thing. The two biggest drivers of any asset price we think in the world over the next 5, 10, 20 years will be these two things: digitization and climate change. And you got to ask yourself in your portfolio, how are your companies? I don't know if you got a picture of that. If you want to take a snapshot of that, but in your is your company advantage from increased focus on digitization and climate change? Is it disadvantage? But we still think it's something you kind of need to own, because many of my clients that say, I want EVs, but I don't want Tesla, our message to them is, you run the risk of not owning the company that could make all the other stuff you own obsolete. And you need to kind of cover that risk.
Now, I tend to agree with Adam Jonas, and it's so refreshing to see somebody on the street. There's not that many times in which you see them understanding a little bit of how the future of transportation is going to end up being. Very few companies are going to be benefiting from the digitalization and also climate change. Tesla is definitely going to be in the #1 spot. Now, I want to know your opinion. What do you think about Adam Jonas' $880 price target as a buy? What do you think about his assessment? What do you think about the Tesla insurance, which is something that I touched up a little bit more on this video, as well as the battery supply? Are you concerned in any way, shape, or form that Tesla is not going to be able to achieve its target numbers? I would love to read your opinions in the comment section below. Now, I must say that these videos are not financial advice. I personally, in my opinion, think that Tesla stock is a buy for the future. I do encourage you guys to continue to do your own due diligence, and videos like this are only for perspective. And if you found this video helpful and you haven't subscribed already, consider subscribing to Electric Invest and hit the notification bell so you don't miss the next video on Tesla. And without further ado, guys, I'll see you guys on the next video.